All right, good morning. Yeah, good morning, everyone. Another Monday morning to crash the market. All right, so for the let's start for the plan for the day. Let's start with the plan for the day. All right, so there was an opportunity on gold, but you have to stick to your trading plan. So since it is not time for me to execute trade, I just did the analysis and it just played out. So, good morning. Yeah, Brandy, what's up? It's been a while. I heard your voice, or I heard from you. I hope everything is going on well. How is trading going to so far? So, if you join the stream, kindly give a like to the stream. Click on the thumbs up button, give a like to the stream. Let's do some chart breakdown. So, there was opportunity on gold this morning, but unfortunately, it happens at the time that you don't usually execute trade. Sticking to your trading plan is very, very important. So no matter how the setup is looking like, if it is outside your trading zone, don't force yourself to execute it. And if it happens the trade goes against you, you are going to what? Regret taking the trade. So it's always important you stick to your trading plan. Sticking to your trading plan is very, very important when it comes to trading. All right, when it comes, so there was a nice opportunity on gold this morning. There was a perfect break. Price broke out from the zone, made a rate tested. It's rate tested on this zone. You get it, and the trend continued. It has even broken the the previous H4 low. You get it, has broken the previous H4 low. So what's I was expecting it to what happened during the New York session. The London Open. But since gold moved very fast, what happened? It just took off. But I think there's still an opportunity. It's still valid since the H4 has a zone to fill. It's still valid. So you just have to wait for the pullback. The pullback, see some market structure on gold, then we take the continuation. So we just want a pullback on gold, price creating a resistance over here, then we take the continuation of the trade. That's what you are expecting it to happen this morning. Yeah, so let's check. First of all, let's check the economic calendar. I know some people are really, really tired about this trading thing. A lot of people are tired. So you see, every good thing takes time for it to manifest. You don't have to expect it to get. Trading is and up to now, at my stage, with my level of experience in the game, I'm still learning. You get it? I am still learning from every single trade that I take. There's a learning lesson over there. You get it? So at my stage, with my number of years or experience in the game, I still learn. So if you come into the game for a month or two and you will expect, as in your expectation, things are not going as planned, you are not meeting your expectation, and because of that you want to give up, then there's no way you are going to be successful in anything that you do in life. You get it? Because this is a whole skill on its own, and sometimes it takes some people 10 years, it takes some people a lot of years, but I'm not saying it's going to take you that long years to what to for you to see profitability, but it takes time. Okay, it takes time. Up to my stage, I have some things I still what learn in the game. So don't expect, if you come into the game for a month or two, you expect things to just happen in your way. That doesn't way. If you are not as in embracing if you are not embracing knowledge or information, then I don't think it's going to be something beneficial to you. You need to constantly what put on the work by learning. It's all about learning. You need to learn constantly. You get it? You learn to, because for you to be able to get updated with the patterns, how the market form, the structures and those things, it takes time. You get it? It takes time repeating the same thing, rinse and repeating the same process, rinse and repeating the same process. That is what is going to give you the experience. Experience comes as a result of you being in the game for a very long time. But if you feel like giving up, I think it's you can give up and just, I don't know, if there was something better out there for you, that's fine. But if you feel like giving up, that's not the best way to go by things. You need to stick to something for a very long time. That's when you are going to see results. Okay, so you see me breaking things down very simple. Yesterday, some people were saying the way I break down 10 charts is very simple, and it comes with a long years of experience in the game. It wasn't a one day thing. Okay, I started somewhere before getting to this stage, so it wasn't a one day, a month or two thing. It's years of what experience in the game. That's what has gotten me into this far. So don't expect things to just fall on your lap just a month or two, then it's still. So all your losses are lessons. Losses are lessons. So if you lose, you just watch, you just go back to the trade. What did you do wrong? Keep on refining your skill. That's when you are going to be good at this thing. But if you don't refine your losses, if you don't go back to your losses or your trades and rinse and repeat the same process, I think it's going to be very hard for you. So keep on repeating the same process, and I think things are going to be very simple and easy for you. All right, so let's move on to the fundamentals. So looking at the fundamentals for today is 17th. Okay, today is 17th. So February, I've not executed any trade for February because it was like kind of busy month for me. So this week I'm very sure I'll be getting time for this week. So I'm constantly watching the chart. Every single tick, I'm going to be watching the chart. Every single tip, I'm going to be watching the chart. So this week I have to get some trade this week. I'm very serious this week. So let's see the fundamentals. So today, during the lending session, you're having a clean day. You get it? We're having clean day, so we are not going to be expecting unexpected spike in the market. Clean day, we don't have any high impact news. They are all yellow folders. We don't have any high impact news. And looking at during the New York session, we are going to be having a bank holiday for CAD and USD. So during the New York session, you don't have to. I'm not going to be participating during the New York session. After the lending session, I'm just done for the day. Okay, I'm not going to involve myself during the New York. So the reason why, let me give you the reason it is not advisable to trade. Why it is not advisable to trade during bank holidays. Why it is not advisable to be trading. Let me give you these 3 tips. Why it is not advisable to trade bank holiday. So when it comes to bank holiday, okay, so when it comes to the forex market, let me make it brief before the lending session starts. When it comes to the forex market is being influenced by a country. Okay, or let me say the forex market is being influenced by, we're having some participants who participate in the forex market. So forex participants, those are the major players. Those move the exchange rate, okay, because of how huge they are making transaction, because of the orders that they are bringing in the market is very huge. That's why when they are not participating in the market becomes very slow. So these major players, we have in the bank, we have in the big institutions, okay, the big institutions, the corporations, okay, the big institutions, the corporations. So like Nissan, like Toyota, like the big corporations, you get it? The big corporations, the government. So for African, for instance, we are used to taking IMF loans. So if the government is taking IMF loan, International Monetary Funds, okay, if they are taking IMF loans and those stuffs, they also move the exchange rate. So if you are someone who has been up to date with the fundamentals and other stuffs, anytime you hear maybe they are going to take international loans to stabilize the exchange rate, all these things move the exchange rate, okay, all these things. So these are they are big players in the banks, okay. So the JP Morgans and those stuff, the commercial banks, those people move the exchange rate. So when you talk about exchange rate, comparing the price value of 2 currencies, so comparing the price value of gold and United States dollar, all these things are the factors that move the exchange rate. So these are the people that move the exchange rate. Okay, so if these people are absent in the market, okay, so if you come to the retail market, like we formed, I think 2 to 3% of what the forex market. The retail traders, the speculators, forms like 2 to 3% of the forex market. Okay, so you see the rest of the 97% are the big institutions, are the big corporations, the government, okay, the hedge funds, those manage big funds. Those are the people. The 97% are those people. The speculators are only just few, 2%, 2 to 3%. We are the retail traders. We move like we are the 2 to 3%. We form 2 to 3% of the forex market. The rest is all the big players. You get it? So if these people are not participating in the market, what do you think is going to happen in the market? The market is going to be very slow. Movement in the market is going to be very slow. You get it? It's going to be very slow when it comes to trade execution. So normally when these people are not participating, we stay out from the market and we wait for the times that, because normally we follow their 4 steps. Okay, we follow their 4 steps. If they move, we also move. If they stay back, we also stay back. So usually that's what happens in the market. So if these people are not participating in the forex market, we are not going to be seeing high volume in the market. So during the bank holidays, if these people are absent in the market, okay, if these people are absent in the market, what usually happens in the market is what usually happens is there's going to be lack of liquidity. So liquidity simply means what? People buying and selling a currency. So there was going to be liquidity. Okay, there was going to be liquidity, low liquidity. Okay, low liquidity. Liquidity simply means what? People buying and selling volume that is coming into the market. So if people are not patronizing, or if people are not moving, if the banks are not participating in the market, you are going to be having low liquidity. Okay, so when we are having low liquidity in the market is going to move very slow. Okay, the market is mostly going to be ranging, because those people bringing in big volumes, those people trading big volumes are not participating in the market. So it's going to be very hard. If you execute a sell, price is going to be very slow. Okay, price is going to be very slow in the market. Okay, so that means there was low liquidity in the market. So that's why we always advise you trade a liquid currency pair. So liquid currency pairs are like the major currency pairs, like the Euro USD, GBP USD. Those are the high liquid pairs. Okay, a lot of people are trading, a lot of people are using those currencies to make transactions. So usually what happens is when you execute a trade, the chances that price is going to move fast in your favor is very high. So it's always important you trade a liquid currency pair. So like GBP USD, USD CHF, USD CAD, and USD JPY, those are the liquid. But if you trade a crossing, or if you trade the exotic currency pairs, usually they are very slow. Okay, usually they are very slow. So low liquidity when it comes to when there was bank holiday, there was low liquidity in the market, and there was you are going to be facing when you execute a trade. Spread is going to also be very high. Okay, because people are not participating in the market, so it's going to cost you a very high amount of money to be able to trade, or to able to trade a currency pair, to be able to trade an asset class. That's when there was low liquidity. That's when there was bank holiday. Okay, so when there was bank holiday, spread is going to be very high. Spread is also going to be very high. Spread is also going to be very high when there was bank holiday. Okay, so these are the reason why I always advise it is very important you avoid bank holiday. You stay out when the market resumes to normal, then you participate. Okay, then you trade the currency market. All right, so let's see. So that's it. You are going to be having bank holiday during the New York session. During the New York session, you are not going to be trading. Okay, so let's see this week. So this week, Tuesday, during the lending session, you are going to also be having claimant count change. during the Tuesday, we are going to be having claimant count change. We are going to be having claimant count change. Okay, and President Trump too is also going to be speaking. Okay, so Wednesday too, during the lending session, we are going to be having CPI on GBP. So this week, lending session is packed with a lot of news events. So we are going to be having unemployment claims too during Thursday. And Friday, we are having retail sales. So this week, lending session is full of what? It's filled with a lot of news events. So let's see what's going to be happening. By today, during the New York session, we are going to be having bank holiday. All right, so let's see what's going to happen. So let's start from gold. Let's analyze gold first because it's more volatile. Let's analyze gold. So lending session, you are not having any high impact news for today. So let's see. If you start our top-down analysis for today, looking at the monthly time frame for this currency pair, looking at the monthly time frame, we're having this rejectional level over here. There's a rejectional level over here at the monthly time frame. So looking at the weekly time frame, with the weekly time frame on gold, so gold was in all-time high. Gold got to a level that it hasn't gotten there before. So looking at the previous data, you see where gold started forming. So it started forming around this side. That was I think is it 1937 or so. So up to now, gold has been rising. So this is the highest level gold got to. So the highest level that gold has gotten to is around 2,945. So one ounce of gold is going to cost you $2,945. Okay, 1 ounce of gold is going to cost you $2,945. So this is how it goes. So gold went to the highest level. Okay, so there was no data. If you look left, there was no data to your left for us to use it in marking our hot support and resistance or the reactional levels. So looking at the weekly time frame, gold is in what? There's no reactional level to looking left as well. Okay, so this is the reactional level in case price is coming down. Okay, if price decides to come down, this is the level I'm expecting gold to get to. Okay, so suppose maybe I'm trading or I'm focusing solely on the weekly time frame, I'll be waiting or I'll be expecting gold to pull back on this level before I will execute. That is the level I'll be expecting to execute. So looking at the daily time frame on gold, we're having this rejectional level to as well over there on gold, rejectional level to over there. There was a rejectional level over here. So looking at the H4 time frame, so this is the point I was expecting the sell. So you can see the daily time frame. The daily time frame is currently, the trend for the daily time frame is what? An uptrend. Price made highs and lows. So currently price is in what? A downtrend on the daily time frame. Okay, price is in a downtrend on the daily time frame. So looking at the H4 time frame too is in a downtrend. So this is the point I was expecting. Price broke out from the zone, created this resistance over here. So price is currently creating a resistance on the H4 time frame. So at this point there was a rejectional level over here, and we all can remember that this zone, okay, this zone is what? This zone is a daily time frame zone. Okay, this zone is a daily time frame zone. So we're having this key level to over here. There's a key level to over there. Okay, so I'm expecting price to create. So at this point, the H4 is not giving an entry at this point. So this is where you look for entry. So the pullback that I was expecting is currently happening. Okay, so the pullback that you're expecting it to happen. So H1 time frame too is as well, even though it's an uptrend, but the H1 is making a pullback over here. So there was no entry at the H1 time frame. There was no entry So I'm be waiting for a pullback. Okay, so I think the entry can happen. So let's wait for the H1 time frame to close. If the H1 time frame if the H1 time frame close, I think there can be an entry at the 15-minute time frame on gold. Yeah, so it's currently pulling back. So let's see. So we have like 3 minutes for this one to close. We have like 3 minutes for the candle to close. So the H4 has made a perfect break and retest, currently retesting on this zone. So you just have to see a rejectional candle. Okay, you just have to see a rejectional candle. So you just have to see maybe a resistance, a candle creating a resistance. Okay, a candle creating a resistance. So we have like 2 minutes 34 seconds for this candle. So let's see how it's going to close. The closure of the candle, if it keeps on respecting this one, so I think it's the same entry that I saw the other time on gold. You saw the other time on gold. Let's wait for the closure of the 15 minutes, the closure of the H1 time frame, and let's see how it's going to happen, because we're having this strong zone that is supposed to respect. So if the 50-minute candle close give us this resistance, I think we will be having this multiple rejectional levels over here. Okay, so the break of this one can be a 9. So let's wait for the closure. You have like few seconds for it to close. So if it's closed, then we make decision on gold. I think it's going to be a 9 sell, because this is daily zone. Okay, this is a daily reaction. This is a daily reactional level. This is a daily reactional level. So if this zone, how you are going to know this level is going to be respected is by seeing a shift in trend. Okay, so you guys can remember I said I'm waiting for a pullback. Okay, so mostly if you enter the trade when there's no high volume time, this is what happens. Okay, so this move was a fake out, because this was the zone that you were supposed to get filled. So this move was a fake out move. So I think it gave out some pips over there, like 84 pips. There was 84 pips. Okay, so I think it's like, yeah, so we have like 49 seconds more. So looking at the 30-minute candle too, with the previous 30-minute candle has broken the high of this one. So let's see the closure of the candle, and I will explain something here. I will explain. Okay, so I like the way the candle is closing. It's going to align with lending up. So you see this whole wick. You see this whole wick over here. Okay, so the candle has closed, but unfortunately the candle closed with what? A bullish candle. You get it? The candle closed with a bullish candle, which let me tell you, let me give you this information. If you are taking a trade, okay, so we have some people that they normally do sell limit and buy limit. This is it is not something I would advise anyone to be doing that. Okay, that buy limit and sell limit, because if you are executing a trade, you have to always make sure the candle is a candle showing you that price is ready to take off. Okay, so if you take a sell limit over here, one thing that you're going to face is what? You don't know when price is going to retrace. Okay, it can happen that this one is going to get invalidated, but you just want to be first in entry, which is going to cause you a loss. So there's no, if you watch the various time frames, we want to sell, right? We want to sell, but the H1 time frame is giving you a bullish candle. It's closed with a bullish candle. The M30 time frame is showing you what? A bullish candle. M15 time frame, they are all bullish candle, and you want to sell. So at least you have to see something. You have to see a bearish candle telling you that, oh, maybe the price the market is ready to sell, but they are all showing you bullish candle and you want to sell. There's no signal. You need to wait for an indication, something that is showing you or telling you that price is ready to what, take a sell. But price is yet not ready. Price is not giving you any clue. Okay, price is not giving you any hint that it is ready to sell and you want to sell. Okay, so at this point, what you are going to be waiting for is, we are either going to be waiting for 30-minute candle to close, give us a resistance, which sometimes we can miss the trade, but it's fine to wait. Okay, we are going to wait for the 30-minute candle to close bearish. We are going to wait for closure of the 30-minute candle. We are not going to impulsively take a sell. Okay, if you miss the trade, that's fine, but it's always better, or it's always fine to look for a high probability trade setups. Okay, so we are going to wait for the closure of this 30-minute time frame candle. Okay, so the closure of the candle, then we execute a sell. Okay, then we execute a sell. So we have like 27 minutes for the candle to close, and as I'm saying, I'm repeating myself again, we can miss the trade, okay, by price moving very fast. Price can move very fast and we can miss the trade, but it's always important what we wait for the correct thing to happen. Okay, so don't just because price has just made a perfect at the H4 time frame, price has just made break retested on this one, it means price is compulsorily going to move in your favor. That's not how it goes. You need to wait for, so that's why sometimes I go to the lower time frames and look for entries. Okay, since H4 time frame is not giving me an entry, I will just wait for what, there was a perfect break and retest over here, so I have to wait for the 30-minute candle to close above below this one. Okay, then I take advantage of the whole of this zone. So the whole of the zone is like 135 pips. Okay, so risking like maybe 72 pips will be okay. So let's wait for the flip of the candle to close bearish, then we take the sell entry. So something like this sort is what I'm expecting it to happen. Something of this sort is what I'm expecting it to happen. You get it? I'm expecting something of this sort to happen. This is what I'm expecting it to happen. So I'm not impulsively going to enter a sell over here because price has made a perfect break and retested on this zone at the daily time frame zone. So I'm going to impulsively going to enter a sell. That's not how it works. Okay, wait for confirmations before you execute. So we are going to wait for the closure of the 30-minute time frame, or the maybe 15-minute time frame too can be fine. So that's what we are going to be waiting for. All right, so let's move to the other currency pairs. So GBP USD. Okay, so this one too, I was watching it, but it's kind of ranging. I was expecting price to just make some small pullback over here, then price will continue. So it's always good to wait. Waiting is good, you get it? Waiting is good. We are not forcing things to happen. It's always important to wait. So what you are waiting for is price breaking out from a zone, making a pullback, then we find an entry and execute. Very simple. That's the trading plan. You rinse and repeat the same process every day. Rinse and repeat, rinse and repeat. Nothing changes. We do everything. So you come 100,000 years, you come again. If you are alive, you are still going to be meeting me doing the same thing over. I'm not going to be hopping from one strategy thinking this person is doing well, so I have to go and learn the strategy. That's not how it goes. I'm rinsing and repeating the same thing that I'm doing. That is what is going to make me better trader. That's what's going to make me master my system. Okay, so stick to one thing for a very long time. All right, so looking at GBP USD, this is what we are expecting it to happen for today. With GBP USD, looking at the monthly time frame, the monthly time frame just broke out, made a pullback over here. So I'm expecting price to come to this side, okay, or this side. That's what I'm expecting it to happen. So after identifying your structure, monthly time frame structure is what? A downtrend. Okay, price was just making highs, lows, highs. So at this point, price was a downtrend at this point. Okay, price was an uptrend at this point, higher highs and higher lows. The moment it made a higher high, broke this one, it turned towards a downtrend. Okay, price turned to a downtrend. It made higher so this is lower low, it made lower high, it made low, lower high. Okay, So the moment this one broke, it turned to what? An uptrend. So at this point, price is in an uptrend, made a lower low again. So currently the trend at the monthly time frame is an uptrend. Sorry, the trend at the monthly time frame is a downtrend. So you're having this rejectional level over here. So you have to understand that this candle hasn't closed. So this level, okay, this level is still a valid level that price is going to get respected. This level is also a valid level that price is still going to be getting respected. This level is also valid. So looking at the weekly time frame, we are having this rejectional level over here. There was a rejectional level 2 as well over here. Okay, there was a rejectional level 2 as well over here. So looking at the weekly time frame, what's the trend at the weekly time frame? The weekly time frame trend is an uptrend, in the sense that price was just trending down over here. There was a downtrend over here, and the moment price broke this level, okay, the moment price broke this level, you see the candle has broken above this one. So the moment it broke, the trend shifted to what? An uptrend at this point. Okay, so the weekly time frame trend for GBP USD is an uptrend. The weekly time frame trend is an uptrend. Okay, so looking at the daily time frame, with the daily time frame trend, the daily time frame trend is also what? An uptrend. Okay, price just made highs and lows. There was highs and lows. So at this point, the trend is an uptrend at this time frame. So what it is expected for us to do, is what? Price is currently sitting on what? You see, this zone was a weekly time frame zone. If you pull up your trend line, if you pull up your horizontal line, you notice that this level was a weekly time frame level at this point. It was a weekly time frame level. Okay, there was a weekly time frame level. Looking at the H4 time frame, so what I was expecting, so during yesterday when we were doing the chart breakdown and back testing, I said the way price has formed, what we are expecting it to happen is what? Is to wait for the pullback, then the trend is going to continue uptrend. So those who joined yesterday's session, you guys will notice that we talked about this thing. So you see, price has done exactly what we said, but I was expecting price to just make some small consolidation over here, then we take the breakout to this side. Okay, but price is currently what? In the middle of a range. Looking at this one, price is currently in the middle of the range. There was several rejectional levels too at this point. There was several rejectional level over here. So the chances that price is going to get, so we normally don't buy on what? We don't buy on a resistance level. We don't sell on what? A support level. We have to wait for price to what? We have to wait for price to break out, give us a clean zone, then we take the trade. We don't buy and sell on support and resistance levels. Okay, you don't have to buy. So this price is currently on a resistance level, so it is not advisable to be taking a buy over here. It is not advisable to be taking a buy on this level. So we have to wait for price to break out from the level. Okay, price to break out from the level, then what? We execute a buy. Okay, we execute a buy. So currently, if you move to the lower time frame, you notice that price is currently ranging, which is not safe for us to take a buy. Okay, which is not safe for us to take a buy. So we're having a choked, the zones over here is very choked. It is not advisable to be taking trade like 10 pips over here, like 12 pips over here. Price, before price will close, it is going to fill half of this zone. This is 10 pips, and if price fill half of this zone, the remaining one is going to be like 5 pips. Taking your spread like 2 pips, the maximum should be like 2 pips. Taking your spread like 2 pips out of this one, it is going to left with like 3 pips, which is not safe for us to take a buy on such trade. Okay, which is not safe for us to take a buy on such trade. So it's always advisable we stay out when the zones are not enough. Okay, the zones at this point is not enough for us to take trades over there, so we just have to wait for price to break out. So at this point, I'm waiting for price to break. If you look left, you see there was clean traffic, there was clean area. Okay, there was no support and resistance levels over here. So at this point, what I would love to do is what, wait for price to break out, make a pullback, then I'll take what, I'll take a buy at this point. This is what I'll be expecting to happen on GBP. But currently, the zone is very choked. You're having a lot of rejectional level. And one thing too that I always advise is, if price is currently in the range, okay, if price is ranging, what is always advisable is what, is to wait for price to break out from the zone, wait for the pullback, then you take a trade. But anytime you see a lot of rejectional levels, at a particular level, at a particular area, mostly what happens is what, price normally range, okay, because the zones are mostly going to restrict, or mostly going to make it difficult for price to move. So you are mostly going to be seeing something like this, as you are seeing it now. We are going to be seeing something back and forth, price making back and forth because of the zone. Price is going to make back and forth. Okay, so that's what usually happens when you are executing. So mostly what I do is what, I wait for price to what, break out from a zone. If it breaks out from the zone and there's a clean area, for us to take a trade, then I'll take a trade at such area. Mostly that's what I usually do. I don't execute trades on what, I don't execute trades when there's traffic, there's maybe support and resistances areas. I avoid such things. Okay, so with GBP USD, I'm not looking for a sell because all the hot time frames are what, pointing up. So what I'll be doing is what, is to look for a sell opportunity. But currently, the price is currently in a range. So what I would love to do is what, wait for price to break out, pull back, then I'll take the continuation of the trend. So let's see what is happening on gold. So as I said, gold has broken out from the zone that I was talking about. You see the importance of waiting for candle to close. So imagine, or like supposing maybe you were impulsively entered a sell over here, at this point you would have been stopped out by price. So it's always important you wait for confirmation of trades, and the confirmation is not going to be based on the support and resistance level, based on the areas. Confirmation is going to be based on what, the zone. Okay, candles. We are going to be using candles for confirmation. You are not going to be using zones, since price has got into the zone, so you are going to be executing. We are going to be using structure and what, zones. If price flip, if the trend flip based on the time frame you are focusing, then we take a sell. That's what usually we are going to be doing. So you don't say price has got into this zone, so you are automatically going to enter a sell. That's not how mostly we go by things. We are going to be waiting for price to what, get to the level, wait for candle confirmation, then we execute a trade. So this is what is happening on gold, then, which is not something that you were dreaming for. So if price can still flip bearish, okay, gold can do anything. So price can still flip bearish. So you are waiting for the flip of the candle. Okay, after the flip of the candle, then we take a trade, we take a sell. Okay, then we take a sell. So let's see, let's check out on USD card. So if there was an opportunity on USD card, so looking at USD card, with USD card, there was this rejectional level to over here. So for you to be able to see the levels very well and clear, we shift it towards a line chart. Okay, so the best way to maybe follow what I'm doing is what, before you even join the stream, you need to do your analysis and see whether your analysis is going to match with whatever I'm doing over here. Okay, that is what mostly you have to be doing. You need to do your analysis and look and check it out to see if it matches with what I'm doing. So with the monthly time frame, we're having this rejectional level on the monthly time frame. Looking at the weekly time frame too as well, the weekly time frame, we're having this rejectional level over here. Okay, so the weekly time frame is clearly what, a downtrend. So what I'm waiting for is for price to pull back over here or over here. If price pulls back over here, then I'll take the continuation of the trend. Okay, at the daily time frame. at the weekly time frame. That's what I'm expecting it to happen. So currently price has broken from all-time consolidation. You see, price consolidated for a very long time over here. Price consolidated, made a pullback, consolidated, bring a pullback. Price consolidated enough over here. Okay, and finally last week price was able to break out from the consolidation zone. So as price broke out from the consolidation zone, we are waiting for a pullback over here. Okay, we are waiting for a pullback over there, then we take the continuation of the trade. So this is what is going to happen. So at the daily time frame, we are expecting price to come to this side. We are going to be expecting price to come to this side at the daily time frame. Okay, at the daily time frame I'm expecting, so let me check out the 15-minute time frame on gold is closing. Okay, so as I said, it can still flip back to the zone again. Okay, so the 15-minute time frame has closed. So this is what you are expecting. We are going to be if the 30-minute candle happens to close within the zone, then I think there will be a sell opportunity. So we have like 12 minutes. So what you are going to be doing is what? Wait for the 30-minute candle to flip within the zone. Then what? We can go for a sell. Because looking at gold, we're having a lot of weak rejections over here, and there was still a gap. There was a gap over here that price can still get filled. So but before we enter, we need to wait for the confirmation. So the confirmation is what? Waiting for the candle to break below this zone. If price breaks below this zone, I think we can go in for a sell. Okay, so we are going to be waiting for the candle to close. If the 30-minute candle close below this one, I'll be taking a sell. Okay, I'll be taking a sell because you're having this zone over here at the daily time frame, and price, the 15-minute time frame candle has broken above the zone. Okay, so if you take a sell over here, the zone is going to be very choke. You need to wait for a closure below this zone. If the candle is able to close below this zone, then I think it's going to be a good confirmation to take a sell. So this is what I'm expecting it to happen on gold. I'll wait for the candle to close below this zone before I'll look for a sell opportunity on gold. So on USD card, looking at the daily time frame, as I indicated, was it on USD card? Okay, so looking at the daily time frame on USD card, this is what I'm expecting. There's a rejectional level 2 over here as well. Price has currently gotten to this several rejectional level at this point. There's several rejectional level 2 over here for price to continue. So the daily time frame is clearly what? The weekly time frame is a downtrend, the daily time frame is a downtrend. Okay, so even if you pull your trend line, you will notice that price is currently what? A downtrend at this point. Price is making lower lows and lower highs. There's a lot of lower lows, lower highs, lower lows, lower. So basically this is how we read the market. Price is making lower lows and lower highs at this point. You get it? Price is making lower lows and lower highs at this point. So what I'm expecting it to happen is what? For price to what? Pull back on this level. Okay, for price to pull back on this level. If price pulls back on this level, I'm hoping the daily time frame can, within the course of the week, the daily time frame will move to this side. Okay, if the daily time frame moves to this side, the daily time frame creating a support, a resistance, then we take the continuation. So at the daily time frame at this point, price is currently what? Price is currently on this resistance level. So what I'm expecting it to happen is what? Either price will break out from this reactional level and pull back, then we take the continuation, or price will retest, pull back over here, retest on this one, then we take the continuation of the trend. Okay, so these are the two scenarios. These are the two things that I'm expecting it to happen. Two scenarios that I'm expecting. Either price will break out from this side, close below this one, pull back over here, then I'll take the continuation of the sell, or price is either, since it's a reactional level, price can just get rejected over here Okay, price getting rejected over here, then it will pull back over here, then I will be looking for a sell at this point. Okay, then I'll be looking for a sell at this point. So these are the things that I'm expecting it to happen on USD card. But let's look at the H4 time frame. If you look carefully, you will notice that the daily H4 time frame to what is a downtrend. So you notice that from the weekly time frame, from the daily time frame, they are all what? The weekly time frame, the daily time frame, and the H4 time frame are all what? Downtrend. So when you see market structure like this, if you see the market behaving like this, you don't have to be looking for a sell. You have to look for you don't have to be looking for a buy. You have to look for a sell at this point. Okay, so currently the H4 time frame, looking at the H4 time frame, price made a consolidation. Price made a consolidation over here. So price made a price consolidated for some time over here. Okay, when it broke out, price made a consolidation. So dated over. Okay, price broke out from this side, pull back over here, price consolidated, pull back over here. So the moment it broke out from this side, the trend is still what? A downtrend. So it's currently consolidating to at this level. Price is currently consolidating to at this level. So let's try and draw our key levels that price is going to get rejected on. So there was a key level over here, various key levels over here. There was a key level over here. Okay, so this is the point I'm expecting price to what? So I would love price to this current candle, this ongoing candle, to close around this side. If the ongoing candle close around this side, because if you watch the H4 time frame, the previous H4 time frame, you notice that the closure of the candle is what? Far from the area of interest. So mostly what I do is what? I would love the candle to close at least close to like 2 to 3 pips close to what? The area of interest. Okay, but if the candle close far from the area of interest, it becomes very difficult. It makes the trade confirmation very difficult. So especially something of that sort happens on GBP JPY, I think last week or so, and I was expecting the candle to close below the area of interest to take a sell. So something of this sort, I was expecting the candle to close this candle. I was expecting this candle to close, at least the body of the candle to close below what? To close around this level. But see, it just made a wick and it closed the wick. What? It just tested this one and the body of the candle closed around this side. So it was far from the area of interest. And what happened? Price just fell. Okay, but I was expecting the body of the candle to close around this side and I'll take the continuation of the trade. But something of that sort never happened and price continued to fall. So that's what I'm expecting it to happen on USD CHF. I want price to close USD card rather. I want price to close. Okay, so I like the way price is currently closing. If the candle close around that side, okay, if it close around that side, I think we're having free traffic over here. Measuring the pip range, the pip range is around 19 to 20 pips. Okay, 19 to 20 pips. So I think it would be good for what? Execution. Then you look for a shift in trend at the lower time frame. So I like the way this candle too is also giving us the structure. So if this candle close or forms close to this side, a shift in structure, okay, something like this, okay, waiting for the pullback, then we take the continuation, a sell opportunity over here. I think the pip range, the risk reward, let me see if it's going to make sense. Yeah, so I think the risk reward, like, you are going to get more than 1 to 2 risks to reward. You are going to be getting more than one. So that is what I'll be expecting it to happen on what? USD card. But currently I want the candle to close around that level. That's what I would love to see. Yeah, so as I'm saying, I would love price to come close to this one. Okay, currently it's kind of retesting. I want the body of the candle to close around this side. If the body of the candle close around this side, then I'll take a sell. But before that, I would love to see a shift in trend at the lower time frame, as I've indicated over here. Then I'll take the sell. Okay, so it's similar example on what happened last Friday. So last Friday, you notice that price just made a perfect rate. So the entry was everything was clear. Okay, but the thing is, what I was expecting this H4 candle to close below this one. That was what I was expecting it to happen. But I think some people took the trade, and I would have even taken it, but by then I wasn't available on the chart. But you see, since I'm in love with the chart, even if I'm in town, so sometimes I'm even in town, but I'm using my phone to analyze. But one thing is, before I will execute a trade, I have to be on my decks, because when it comes to risk management, and I can't be working in town whilst I'm executing a trade. I don't do that thing. I have to be on my decks, okay, manage my risks, knowing the amount I'm going to be risking. If I'm having the sound mind, I don't execute a trade if I don't have the sound mind. Okay, if you're roaming in town and you are executing a trade, you think it's going to affect your mindset. So I have to make sure I'm comfortable on my decks before I'll execute a trade. So it was looking good. By then I was kind of busy, but I was doing the analysis whilst I was doing my errands. Okay, so I have to always make sure I'm keeping up to date with the charts. I'm always analyzing, even if I'm not close to my decks, I'm using my phone to analyze. So price close over here, but the 15-minute time frame gave a perfect entry signal over here. Okay, the 15-minute time frame gave a perfect entry signal. There was a shift in trend over here. Price broke, made a red test, so this would have been the first entry. Okay, price continued. So I think this point was the first entry. The moment price broke out, this is the point the entry would have been. Okay, on USD card, and it just fell like what? Waterfall. Okay, it just fell. So this point would have been the entry, and it gave like more than 1 to 5 risks to reward. I think so. It gave more than 1 to 5 risks to reward. So the risk reward was looking good. More than 1 to 5. More than 1 to 5 before. Okay, more than 1 to 3 before it even started pulling back. So USD card was looking good. It was perfect entry signal last week. So it's the same thing that I'm expecting this one to happen. I'm expecting price to close around this side, then I will look for entry confirmation on the lower time frames, either on 30-minute time frame or on what, the M15 time frame. Then I'll execute a trade. So that's what I'm expecting it to happen on what, USD card. By looking at the lower time frames, I think the trend, the structure over here is not looking good. Let me check out on gold. Okay, so gold still, it hasn't still broken below the zone that you're expecting it to. I was thinking the 30 minutes. So we have like 28 seconds for the 30-minute candle to close. So it's still above the zone that you are targeting. So this is the zone that we usually, this is what you have to do. You have to buy and sell on zones. Okay, anytime you are executing a trade, don't buy in the middle of the range, because mostly price is very sensitive on these levels. Okay, if you buy in the middle of the range, it is easily for you to get stopped out. Okay, if price is moving here, and you said, if you look at the daily time frame, there was no zone over here. If you look at the weekly time frame, there was no zone over here, and you said you are going to take a sell in the middle of the range. And one thing you need to understand, when it comes to the zones, okay, when it comes to the zone, they forms in all the time frames. All the time frames, we are having zones over here. If you move to the 30-minute time frame, there was a zone over here. If you move to the M5 time frame, 15-minute time frame, there was a zone over here. But one thing you need to understand when it comes to zones is what, it does not respect all, some of the time frames, especially the lower time frames like the M5 time frame, M15 time frame, M30 time frames. They usually don't get respected. Price usually don't respect them as compared to what, the higher time frame like the the daily time frames, like the H4 time frame, like the weekly time frame, usually price gets respect those time frames. But when it comes to the lower time frames, like the 15-minute time frame, the M5 time frame, usually price doesn't respect those time frames. Okay, price doesn't respect those time frames. So you need to always make sure you are paying attention to the zones that you are executing on. Okay. Okay, so as I'm saying, some of the time frame zones don't usually get respected as compared to the higher time frame. So you have to understand the zones that you are going to be executing on. If you are executing on the 30-minute time frame, it is easily for you to be what, when you are relying on the 30-minute time frame. So you're having 30-minute time frame zone over here. So the reason why I don't usually use this time frames is what, it is easily for price to break through these time frames. Okay, but when it comes to the higher time frame, like the H4 time frame, like the daily time frame, they usually price usually find it difficult to break these time frame zones. Okay, so don't trade in a free area. Okay, don't trade in a free area. Make sure you are trading in a zone where it is very difficult for price to break out from the zone. You get it? It is very difficult for price to break out from the zone. So as I'm saying, I'm going to be waiting for this zone. If price refuses to move ahead, then the next bar stop, the next zone that I'm going to take a sell on is this zone. Okay, this zone. Okay, the rest I'm seeing, if you move to H1 time frame, I'm seeing some zones over here. So yesterday I gave a condition. The only condition that I'm going to be using the H1 time frame zone is when price has made a multiple support and resistance. So the multiple support and resistance that I'm talking about, the multiple support and resistance that I'm talking about is when price has made something like this. So you see, these are what, multiple support and resistance. So if this one forms on the H1 time frame, okay, if this one forms on the H1 time frame, then I can execute a sell over here. Okay, or I can execute a sell using what, the H1 time frame zone. I can execute a sell over here. But if you are having only single, maybe only one, if you are having only one this thing, if you are having only one zone over here on the H1 time frame, I'm not going to use H1 time frame as my reactional levels. So I'm going to be using the H4 and the daily time frame, because when it comes to those time frames, it usually takes time for price to form. Okay, it takes a very long time for price to form when it comes to those time frames. So that's how it works. So trading is like being a soldier. So soldiers don't normally wake up and just being in a playing ground. If they are in war, they don't just stand in a plane playing this thing, a playing field, to start executing or to start shooting. They have to hide and shoot so that their enemies are not going to see them. So it's the same thing in trading. You have to make sure you are hiding on something. You are hiding behind something that when price is pulling back, it's going to be very difficult for price to break that zone. So as suppose maybe I've taken a sell over here and I'll place my stop loss below this zone, it is going to be very hard for price to break this zone. Okay, it's going to be very hard for price to break this zone. So I'm going to be relaxed and wait for price to either flip below the zone. If price flip below the zone again, okay, which I'm expecting it to happen. If price flips below the zone, that is the point I'm going to be taking a sell. But at this point, there's no entry for me to execute when it comes to gold, so I'm going to be waiting for price to flip below the zone, then I'll take, or price to come to this side. Okay, if price come to this side before I'll execute a sell. So the point where I'm going to be executing a buy on gold is what this point. I'm going to be executing a buy on gold only when the candle has broken above this zone. Only when price has broken above this zone, pulls back over here, before I'll take it buy. So someone is saying, hello coach, sorry for asking question before the time. Can someone get experience by steady candles movement and their appearance? Yeah, so we have something called candlestick anatomy. When it comes to trying to confirm an entry, when it comes to trying to see the next movement of price, usually we use candle. So you need to understand the size of the candle. What is the reason behind the size of the candle? So this candle that has formed, what is the reason, like what is the psychology behind this candle? What does it tell you? So this tells, the size of the candle tells you that what there was a lot of selling pressure in the market, there was selling momentum in the market. So you need to understand the psychology behind the candle formation. So if you're a trader and you don't understand reason why candles are formed, it's going to be very difficult for you to make the right decision. So it's always important you understand the size, the psychology behind this candle formation. Okay, the psychology behind this candle formation. And mostly, if the candles, we usually pay attention to the candles when they form on what support and resistance. So looking at this candle, for instance, you see a long upper wick and what a very small body of the candle over here. So this one tells you that what there was a lot of, at certain points in the market, there was a lot of buying pressure and sellers came in, drove price down. Okay, so it is telling you that what, looking at the size of the candle, it is telling you that sellers have lost control in the market and buyers have lost control in the market and sellers are now taking over. So it has formed on what, a resistance level. So if you are taking a trade and you see something of this sort forming on what, a zone, a reactional level, that means what, it is an additional confirmation that price is going to continue to what, the opposite side of the move. Okay, so it is always important to what, understand the size of the candle. That is what candlestick anatomy, understanding the size of the candles and the reason behind the formation of the candle. It is important, or an essential thing that you need to master when it comes to reading charts. Okay, when it comes to reading charts. Okay, so at this point you are going to be waiting for the 30-minute candle to close. At this point, then we make a decision. Okay, you are going to be waiting for the 30-minute candle to close at this point to make a decision. Okay, so let's move on to USD. So if you have any question, okay, if you have any question, you can drop it in the chat box. When I see it, I'll read it and just answer your questions. So the CHF and see what you are going to be expecting. So looking at USD CHF, I think USD CHF, yeah, so USD CHF, let's look at USD CHF. Okay, so looking at USD CHF at the monthly time frame on USD CHF, the monthly time frame, there was a reactional level at this point. There was a reactional level over here. There was another reactional level too at this point. Looking at the weekly time frame, there was another reactional level at this point on the weekly time frame. So currently the weekly time frame is an uptrend, so there was a complex structure over here. Price just made a move, pull back over here. The high wasn't broken, just pulled back. So I'm expecting a continuation of the trend. If price forms on what, a reactional level, I'm expecting the continuation of the trend for price to move up again. Okay, for price to move up again. So this is what I'm expecting it to happen on the weekly time frame. This is the level that I'm expecting price to sit on. Okay, So currently I think price is currently what, sitting on that level. Okay, price is currently sitting on that level. So looking at the daily time frame, there was a rejectional level 2 at this point. There was a reactional level 2 at this point at the daily time frame. There was a reactional level at the daily time frame at this point. Okay, there was a reactional level at this point. So looking at the H4 time frames, so let's check out the trend on the various time frames. Looking at the daily time frame, the daily time frame trend is what? A downtrend. Okay, the daily time frame trend is a downtrend at this point. So I'm expecting a pullback over here. I'm expecting a pullback on this level. I'm expecting price to pull back on this level. Looking at the H4 time frame, there was a reactional level 2 at this point at the H4 time frame. Okay, so price is currently sitting on this reactional level at the H4 time frame. There was a reactional level over here. There was a reactional level 2 over here. Okay, so changing it to a line chart, you can see that price is currently sitting on that zone. So this is what I'm expecting it to happen. So let's look. So since the H4 time frame is not giving us an entry, we need to move to the lower time frames to wait for a flip in structure. Looking at the H1, there was a reactional level at the H1 time frame. So at this point, you see the H1 time frame. The H1 time frame is what? Let's change it to a line chart. The H1 time frame is an uptrend. Okay, the H1 time frame is an uptrend. Looking at the M30 time frame too, it's an uptrend. So I have to wait and see a shift in trend. Okay, I have to wait and see a shift in trend at this point before I'll take a sell. I'll look for a sell on USD CHF. Okay, but currently the lower time frames are kind of ranging at this point. So this is what I'll be expecting it to happen. I'll be expecting price to just make a shift in trend. Okay, so the 15-minute time frame too is also an uptrend. Okay, we are looking for a sell, and if you are looking for a sell and all the time frames are pointing up, all the time frames pattern structure is pointing up, it's going to be very difficult for you to get an entry. It's going to be very difficult for you to. So you need to wait for the shift in trend. If there was a shift in trend over here, okay, if there was a shift in trend over here, if price breaks below this body of the candle, then I think we can go in for what? A sell. But at this point, the market is kind of what? Consolidating, ranging. If you look at the H1 time frame too, there was a reactional level over here. Price is currently ranging and it's not looking good. But the H4 trend is what? Kind of clean. Okay, the H4 trend is kind of clean over here. So I think the best way is what? If H4 candle, since the H4 trend is clean, if the H4 candle close bearish, okay, if the H4 candle close bearish, I think it's going to be what? It's going to be clean for us to what? Take the continuation of the trend. So let's wait for the 30-minute candle to close. If the 30-minute candle close below this zone that I'm expecting, okay, if the bearish candle engulfs this one, then you see if you can get a sell entry over here. So it's always important you wait for candle closure. Candle closure is what we normally use for confirmation. So I'll be waiting for we are having like 14 minutes for the candle to close. So if the candle close below this one, engulfs the previous bullish candle, then we can be taking a sell at this point. That's what I'll be looking for. But it's kind of, the structure is not looking clean. The structure is kind of ranging. So let me look at gold. So gold is still moving up. Gold is kind of still moving up. So I'm still waiting for the flip of the candle. If the candle flips bearish below this one, so you're having like 14 minutes for this candle to close. So if this candle close below this one, so I'll be waiting for, let's wait for the 30-minute candle close. If the candle close below, then you can be looking for a sell. Other than that, then maybe you call it a day. So you are going to be I'm going to be waiting for this 30-minute candle to close. If it's closed below this one, then I'll be going for a sell. Other than that, then there's no entry for me. But USD CHF is kind of rough. Market structure is not clean at all. The market structure is not clean. Okay, the market structure is not clean on USD CHF. So I'll prefer waiting for the H4 candle to close. The closure of the H4 candle. The closure of the H4 candle. The zone is kind of not clean. So 7 pips range. Yeah, the zone is not clean on USD CHF. So measuring the range of this one. So you see, this zone is what? H4 zone. Measuring the range is like 5 pips. It is not something I will be comfortable taking. So this zone is H4 zone over here, and we're having another zone too over here at the H4 time frame. So this is a tight range. That price is going to take time for price to break below. Okay, so even if price breaks below this one, it's going to be very hard for price to break out from this zone. It's going to be very hard for price to break out. For market structure is not looking good. Market structure is not looking good. The patterns are not looking clean. So when we're having several rejectional levels around a particular area, mostly what happens is what price is going to consolidate, moves up and down. So if you look at the top over here, we have multiple rejectional levels too as well. At this point, we're having multiple rejectional levels too at this point, this area. So you're having multiple rejectional levels too at this area. So usually price is also going to try to consolidate. If it comes here, price is going to consolidate. So it is always advisable you wait for price to break out from the zone. Okay, price to break out. I will not love to take a trade in this choked range like this. It's not preferable for me to take a trade in this choked range. Okay, I'll not be taking trade in this choked range. So let me check out GBP JPY. That will be the last pair. I'm still looking to gold and see. So gold is still moving up. I'm still looking for. So let me analyze GBP JPY then. You see, so GBP JPY, looking at the monthly time frame, we're having this rejectional level 2 over here. We're having this rejectional over here. So if you have any question, kindly drop it in the chat box. So we're having this rejectional level over here. There was another rejectional level 2 over here. So looking at the weekly, there was a rejectional level 2 at the weekly time frame. Okay, so there was another rejectional level 2 at this point. There's another rejectional level. So the weekly time frame is what? A downtrend. So if you pull up your trend line, you can see price has been respecting these several levels. There are several levels that price has been respecting it. Okay, you can see price has been respecting this level for a very long time. So it tells you that what the trend is currently what a downtrend. Okay, the trend is currently a downtrend at this point. So looking at the daily time frame, the daily time frame is currently also what a trend on GBP JPY. So there was a rejectional level 2 over here. There was a rejectional level 2 over here. Okay, so the daily time frame is a downtrend. H4 time frame is a downtrend. Okay, looking at the H4 time frame, wow. So currently USDC GBP JPY is looking clean. The daily time frame is a downtrend. The weekly time frame is also a downtrend. H4 time frame is also a downtrend. So at this point, what I'm expecting it to happen on GBP JPY is either price to get rejected over here, or what I would love to see on GBP JPY is for price to break out from this zone, pull back. So you see the whole of these zones, there's a lot of zones for it to be covered over here. There's a lot of zones for price to cover. So I'm expecting price to what come to this level, break out from this zone. If price break out from this zone, then it will be good. I think the pip range is like 257 pips. 257 pips range. So I'll be expecting price to break out from the zone. Okay, or either price will pull back again to this level. If price pulls back again to this level, so you see, I'm always looking for levels that I'm going to be executing on. Those are the levels that I'm always looking for. So I'll be waiting for price to pull back on this level, then what I'll go in for a sell. So this is something that I'll be waiting for. But currently, you have to wait for the level, the candle to close. The candle hasn't closed yet, so there's no entry for now. So this is what I'll be waiting for. So this is what I'll be waiting for on GBP JPY. But one thing you want to understand is what we're having a bank holiday today, so price might just be consolidating during the New York session. So as I said, I'm waiting for the 30-minute candle. So we have like 6 minutes for this candle to close for gold. I'm waiting for the candle to close. The closure of the candle, then you make a decision. So if you have any question, kindly drop it in the chat box. So we are waiting for the 30-minute candle on gold to close. If it's closed below this zone, which gold can do, gold can close below this zone. If it's closed below this zone, then I'll be taking a buy. I'll be taking a sell rather. I'm waiting for the 30-minute candle to close below this zone. Then we're going for a sell on gold. So this is what we are expecting it to happen on gold. Morning, Janet, India. How are you, Janet? So Brenny, how are you doing? Janet, India. All right, I hope you guys are getting value from the information I'm putting out there. If you are getting value from the information I'm giving out there, kindly drop one in the chat box. Let me know if you are getting information. If you are getting more information from the things that I've been putting out there, kindly drop one in the chat box. Kindly drop one in the chat box. So we are waiting for the 30-minute candle to close on gold. So So GBP USD continued moving up. GBP USD continues. So it's kind of also consolidating. USD CHF is also kind of consolidating. It's currently I will not allow taking a sell in this tight range. So USD card is also moving up. Yeah, so it's also moving up. As I indicated, I want price to just, yeah, you've been on low key. You've been on low key. I think the market is not favoring you this February. February has been kind of, but it's a learning this thing. I've learned some trades you could have taken, so I'll just learn when it happens again, especially the H4 break and retests. The H4 break and retest trace. So USD CHF for last week, for instance, there was a lot of opportunities over there. So there was an opportunity over here on USD CHF. That was last week or so. There was another opportunity over here. So last week, if not my busy schedule, I would have even taken this kind of trades, this trade, and USD card too as well. I would have even taken opportunity of them. So this week I'm falling in. I'm watching the chart like 247. I'm watching the chart 247. Every tick of the market you are going to be in. You are going to be in. So usually I don't want to distract myself in case, like if I'm busy, I don't want to distract myself a lot, because when it comes to trading, you need sound mind to be able to make sound decisions. Yeah, so when I'm busy, I don't want to execute trades, because if you are busy, you need to be sound, get sound mind before you execute a trade. If you are busy and you execute a trade, you are going to get yourself distracted. Yeah, February has been tough, but there was one or two. I think you took the USD card, the trade at that time. You went in aggressively. You took the USD card. So this week too, during the learning session, you're having a lot of news events, CPI and those stuffs. Yeah, you were very aggressive. You took it, but it was kind of looking good. It was really looking good. The USD card trade was looking good, but one thing that I never saw was I wanted to share the trade setup, but one thing that made me not share is when you look at this zone, there was a daily zone over here. So I was expecting the H4 candle to close below this zone, but what happened is the body of the candle just closed above, you see. But this thing, I've seen it happening more often, something like this. I think last January or December, the same thing happened on GBP USD too as well. The same thing happened on GBP USD trade. The same thing, the candle, I was expecting the candle to close below, and it also continued. Let me show you the trade that I was talking about. The same thing happened during the festive season. Yeah, similar trade. You see this one, this trade. Yeah, so this trade, I saw it perfectly well that price is going to move down, but you see, I was expecting this candle to close below this one, but what happened? The candle closed above, and it just, so I was having this same trade setup. I was having it in mind when the USD card also formed. I said, oh, this thing might move, so it's all learning process. When it happens again, we are going to ignore, if you are in volume time, we are going to ignore how the structure formed, and we are going to take advantage. So the 30-minute candle has closed. Let me check how gold closed. Let me check how gold close. Let me check the 30 minute. Oh, so the 30 minutes can also close above. So it's still closing above. It's still closing above. Can you people hear me? Can you hear me? Can you hear me? Okay. All right. So as I was saying, what was I even talking about? Yeah, so I'm expecting price to just pull back, and it's never happened. Yeah. Yeah, so all the trades that you missed during last week. So USD CHF is kind of moving. So the H1 time frame close. The H1 time frame close, but the zone is very small. Yeah, good morning, Danny. How are you doing? The zone is very small. The zone is not enough. The zone is not enough. It's kind of choked range. So the H1 time frame gave a perfect rejectional candle, but the zone is very small. The zone is very small, so I will not put myself in this range. Like 5 pips, if you take spread out of this zone, it's going to be like 3 pips. It is not something. And if price gets here, the chances that price, this is a reaction, so there's a reason we call these zones reaction. So with a reaction, price can just break out, or it can just retrace. So mostly when price gets to these levels, there are two things that is involved. Price is either going to break out, or it's either going to pull back. Okay, so the reason why I'm saying this zone is because anytime price will get here, we are going to try to break even, and 3 pips, breaking even within 3 pips, it's not something that you can go for. Some brokers are not even going to allow that. So this zone is very strong. The zone is very, so exactly what I was expecting it to happen on USD CHF. Price has broken out from the level that I was talking about, but the zone is very small. Let me tell you, the zone, price has shifted. The trend has shifted to what? The trend has shifted to what? A downtrend at the 30-minute time frame. So exactly what I'm expecting it to happen. But if not the zone, I would have taken a sell on this one. But the zone is very small. Okay, I would have taken a sell on this one, maybe using the H4 time frame, but the zone is very small. So if you change it to a line chart, you can see the various rejectional levels. So price can get rejected over here. So if you take a sell, it is going to be very difficult to manage the trade. Okay, it is going to be difficult to manage the trade. If price gets to this side, usually I will break even when price gets to this side, but you can't break even with 3 pips zone. I hope you people understand. You can't break even. So exactly what I'm expecting it to happen on USD CHF, exactly what I'm expecting on USD CHF, but the zone is kind of small. The zone is small. The zone is very small. It is going to be very difficult to manage the trade. 3 pips is not something I'll go for. The zone is very small, so I would have taken the sell over here. But if price is moving, you need to think of how to manage the trade too. Okay, how to manage the trade. The zone is very small. The zone is very small. So 3 pips, you can't manage the trade, because anytime price gets here, you need to think of breaking even, in the sense that you are going to see reaction over here. Anytime price gets here, we are going to see reaction over there. Okay, price is either going to what, break out, or what, it is going to get rejected. Price is either going to break out or it's going to get rejected. If the zone is big, I would have executed a sell because it looks good. H4 has made a perfect break and retest over here. You see, it has pulled back on this zone, and the H4, the 30-minute time frame too, has also shifted trend towards a downtrend. H1, looking at the H1 candle, you see the rejectional candle. So everything is looking good, but the zone is very small. I can't execute a trade in a tight range. Okay, I can't execute. And looking at the risk to reward too, it is not something I would love to go for. The risk to reward is not something I would love to go for. So, Brent, what do you think about the zone? Danny, what do you think about the zone? About this trade? This is a perfect trade setup, but the zone. What do you guys think about the trade? The zone is very small. Three pips zone. It's not something I would go for. So exactly what I was expecting it to happen. But if the H4 zone happens to be very big, I would have executed a sell. Yeah, the zone is very, very small. The zone is very, very small. It's in a tight zone. It's in a tight zone. So is the gold, for instance, the H1 time frame can flip below this one too as well. It can flip below. Yeah, it kind of, even the risk reward is not even looking good. It's not even up to 1 to the risk reward is not looking good. You are going to risk like, you are risking like, let's say if you are using the H4 time frame, you are going to risk like using the previous low of the H4, you are going to risk like 6 pips. 6 pips for 6 pips for 4 pips. It's in a tight range. So let's see how it goes. If it breaks out, from the zone, or maybe either the H4 candle is going to create a resistance, another resistance over here, then price will try to, if it happens, it breaks out of the zone, that's fine, then try to break out from the zone. But if not, okay, I think it's currently trying to. So you see, mostly if the zone is very small, price make it very difficult for price to, because one thing you need to understand is what the zones too are not, price is not going to touch the zone exactly most often. Price is not going to hit the zone most often. So sometimes it leaves like 2 pips for it to, before it will get to the zone. So factoring or considering all these things to make sense for this trade to be invalid. Okay, it makes it invalid. It makes it invalid because the H4 time frame has currently closed exactly on the level, on the reactional level. Okay, the H4 time frame has closed exactly on the reactional level, and the 30-minute time frame has shifted trend towards a downtrend. So let me cut gold. So gold is still continuing tracing. So normally around 8:30 to 8:30 GMT2, you can see some volume kicking in the market. If not the zone, I would have if the zone is big, I would have taken the sell. If the zone is big, I would have. So it would have been like the same trade as the USD card trade I took last, or even the same thing that happened over here on USD CHF. It would have been the same trade that happened on USD CHF. This same trade. It would have been the same trade over here. Where is it? Sorry, I think H4 time frame. But this one happens to be the buy. Yeah, this one happens to be a buy. Trend continued. You get it. But this one has just made a complex structure over here. I think this one in the network is kind of. Okay. So guys, my network is kind of slow, so I'll call it a day. See you all same time on Thursday. Okay. Bye bye.